presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look what we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Take it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Manifest your true intentions. Regardless of what language you speak, your intent will manifest through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials down 393. NASDAQ is off 85. S&P's down 62. Percentage-wise, what you have out here, folks, is that you have the Dow down 1.6%, the S&P's down 1.8%, and the NASDAQ down 1%. Gold contract down $24, trading at $17.44 an ounce. We get silver off 48 cents, $15.64 an ounce. Light sweet crude, flat. $20.07 a barrel, notes and bonds. You get the 10-year note up 31 ticks, trading 139.06. The 30-year up almost 3 points, 2 points and 29 ticks at 180.19. And King Dollar up 595 ticks, trading 99.481. The euro is at 109. The yen is at 107.5, and the British pound is at 125 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, you get a contraction of price, and you get a monster contraction of volume. If we take a look at the S&P out here, the SPY, you're doing 93 million shares, which is going into 190 million shares, folks. Bottom line, you have a little small pullback, and you have no sellers in this market. That's your S&P. NDX 100, even stronger. The 3 Qs right now, they hit a low today of 107. They rejected 107. You're at 207, rather. You had a low of 207, rejected 207. You're at 210 right now. You're going into 63 million shares, and we've done 35. So we're lucky if we're going to do about 42 million shares out here. That is saying, guess what? Higher prices are still coming at us inside the marketplace. Gold contract. What do we have with the gold contract? Gold contract back down today. You get lighter volume in the back down. We'll see. You're down $24. So the bottom line, you don't quite have a rejection of lower price. We were down to 1731. You're at 1744. If this thing can finish off somewhere about 1750, then you can say, okay, we had a rejection of lower price. But thus far, you don't have that rejection. What you do have is that you have a big contraction of volume as you're going into the 13th. And of course, what we also have is that we're in a confirmed ABC structure in the way up. You have a price projection of 1804. We hit 1788 yesterday. If we go take a look at the GDX, looking at some of the equities out there, what you're going to see inside the GDX, there are no sellers inside of, well, no, there are sellers, of course, but you're talking about a huge contraction of volume inside of the gold and silver equities. Bottom line, the GDX right now is trading down with 24 million shares, while you're going into 59 million. The GDX more than likely do maybe 32, 33 million shares. Let's go over to the dollar first, because this is all about the dollar right now coming into the close. So the dollar had a monster move out here this morning, folks. The dollar was up 1,000 ticks, over 1,000 ticks. We were at 99,976. Now, what we had happen is that the dollar gave it up pretty quick. The dollar had been over at the range of, let me pull this way. Let's see if I go. There we go. Okay, so if we take a look at it, the dollar had launched the top of a range that had been trading in for a couple days, which is 99.619. We blasted through that thing in a second. And then guess what? Bottom line is that you basically they gave it up in spades. The thing comes all the way back down. You know, right now you get a little pop, but all it's doing is coming up to ice. It's having a tough time trying to get out and above the range that it's in right now. And if it stays in the lower range, we're going to see more S&P numbers, meaning get higher, well, get lower, because we're down 64, as we come into the close. We go take a look at the oil market. They come out with the oil numbers this morning. Huge amount of oil out there, folks. Bottom line, we got down to $19.20. Right now, you are trading out at $20.09. And what you do have here is that you have a lot lighter volume. What we had out here this morning, you know, you were going into the low that was established out here on the 30th of March. That low was $19.27. We had volume there of 759,000 contracts. Well, we broke that. We went to 1920. We rejected that low price, and it's going to be tremendously lighter volume. So that kind of is saying that, guess what? We are basically right here for the moment. I suspect what you're going to see here, however, because I'm saying that, is that you are going to see a run once again to the top of this range, which is $29. So it's quite a range, folks, because when you're talking something that's $20 to $29, we're talking, what, 45%, 48% move topside. And so that's what it looks like it's going to get. Now, that being said, what you haven't done at all is that you haven't broke any type of swing point. So this could be bouncing out here for years. That's the real bottom line. But right now, it looks to me like oil will go higher before it goes lower, or that just may be it. As to the oil contract and how far it actually wants to go into lower price. Notes and bonds. This is the note and bond market has price out here today. They don't have volume behind the move. We're doing 1.1 million contracts inside the 10-year. Bottom line, it's up though. It's up good. It's not giving it up at all. Not even close. The next swing point up here is 139.14. If we take a look at the 30-year. 30-year right now up almost 3 points. You've done 200,000 contracts. That's really light contract volume. And yeah, you're coming into like 450,000 contracts. You know, the last swing high only did have 200,000 contracts, though. More than likely, it will probably run for it. And that the note and bond market is the only thing at this particular point that is basically saying that, okay, this S&P, if that note and bond market, if we start seeing that pullback coming into the close, that would make a probability much higher that this S&P is going to continue higher. Dow Industrials right now down to 409. NASDAQ is up 88. S&P is down 63. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down at 382. You get the NASDAQ off 80, S&P's off 59. And let's go over and look at this oil market because this just came across the tape here. This is going to get interesting to see how this will shake out. So oil's trading at $20.07, and let's see if it's listed under this yet. Yeah, so right now, just come across the tape. This is going to be really Bernie Sanders is going to be going out of his mind, folks, okay, because many of his ideas had to do with basically moving wealth around, and in this particular case, between COVID-19 and, how the government's responded, thank God they have also. But the bottom line is that this is about as close as you can get that you have distribution of wealth on a continual basis. Now, in this case, what the U.S. is talking about is that paying drillers not to produce. This is about the oil market. So this came across. The Department of Energy has drafted a plan to basically alleviate the glut in the oil market, and the way they plan on doing that, and the preliminary aspect here, it looks like they're going to pay them not to produce and not to go to work, and they'll still keep their jobs. So this whole deal. The amazing part that when you actually start looking at this is that if you remember how many times Congress fights about money, and then the amount of bread that we are pushing out, it's like, okay, I know we're definitely a rich country. There's no two ways about that. The real question is that how many trillions can you keep printing without the aspect that you will get inflation kicked in? My take right now is I expect inflation to kick in because the amount of dollars that are going to be flowing through here are going to be pretty incredible. And they're coming out in chunks. So what ends up happening if they're coming out in chunks, I would say that the probability of spending them goes up pretty dramatically also. So and I think when we look at the equity market, the type of bounce that we've already had, I would say that is what is also projecting that, it's going to be a larger number for the same for the same company, but because of inflation, that's what we're actually talking. We're talking a larger number for the exact same product. And what does happen, folks, is that the equity market is something that will basically more than likely price that out first. The reason being is that the equity market prices itself out every single day, where, bonds also do. Real estate market definitely doesn't, because the bottom line is that your fluctuation in that market, something can be worth 100 grand, 90 grand, 110, 80, 85, all of the above. I mean, it goes all over the place. There's no two ways about it. And if that's what we get, that won't be bad. The real question is that, what is it? Is it 3%, 4%? People can live with that. You definitely can't live with something we had in the 70s. If you're around the 70s, that was the wildest thing in the world. And you go to the supermarket and every single day prices were going up. That was pretty crazy. And what also happened then, so check this out. I'm sure that we have plenty of listeners that were not there then. So this is how bizarre this gets, folks. That in, 76, right? Maybe 74, around there. What would end up happening, that's where rates were running at 14, 15%. Yet, real estate was going through the moon, because what was happening is that because it was a hard asset, that the rate of acceleration in real estate happened to be higher than the rate that you're actually borrowing money at. So this gets really wild in an inflationary year, what ends up happening with actual hard assets. And you can actually visualize it in this type of environment. The reason being is that, of course, we've been in the gold market for a long period of time. So if you know the gold market in general, you can go back over a long period of time, and gold doesn't lose value of what it can buy. And when I say doesn't lose value, the fluctuations can be within a year, 2 years, 3 years, and all of that. But you can go back 50 years, 100 years. You could buy a suit with an ounce of gold 100 years ago. You buy a suit today with an ounce of gold. So that's the point. What does happen is that when you can see the amount that is getting thrown out, not just in the aspect of the United States, the whole world, you can see how, hey, listen, it's a piece of paper. And now what it is that it's digital. So you can see, okay, we got to throw these in here. And in fact, we not only have, it looks to me that we're going to have to basically throw in even a lot more money. We were talking about this morning, but if you take a look at this, the next thing I'm sure that we're going to start reading about ASAP. This will probably, I suspect this will be in the Wall Street Journal tomorrow morning. It was probably in today. I haven't got the Wall Street Journal today yet. New York Times, for sure. Washington Post. Any of the big newspapers will have this out here. And what it is, folks, is that in this Paycheck Protection Program, right, there's a lot of businesses that still didn't get through, because you had Wells Fargo. We have Wells Fargo, JP Morgan, and SunTrust. And Wells Fargo just got up and going today. JP Morgan is claiming that they are just getting it together, and they're still not up. But that is not a fact. The reason being is that Ruth Chris came out this morning and announced that they have already received $20 million in the Paycheck Protection Program, and they did it through JP Morgan Chase. Now, when you actually look into the aspect of Ruth Chris, they have a huge amount of stores. They are franchised. That's how this. They have two different ways of doing business. They own some of them. They franchise some of them. Yeah, there they are. So 65 are company owned, 95 are franchised. Bottom line is that they got their money within 1 week, and one of the main reasons, I suspect, is that if you have a lending relationship with the banks are going to make sure that the folks that owe them money, they're going to get them done immediately, and that's what happened in Ruth Chris's case. So when you start multiplying, the max you can get is 10 million. When you start multiplying 10 million times, it doesn't matter. 50, 100, and you can get the 350 billion pretty soon. So I suspect the next battle out here is going to be how much more money are they going to put into that, because I would say that when you're talking about congressmen, when you're talking about society in general, I don't think that thing was set up for the aspect that Ruth Chris gets $20 million, and you have the small businesses in the Main Street in the USA, when I'm talking about, companies with 1 person, 2 people, 10 people, not even in queue yet that they can get it. That's gonna force the hand, and with that, and the hand that we're talking about now is just printing more money, because that's, my take is that that's where we're going down with this. We thought that was a lot of money. Guess what? You can start doubling that 2.5 trillion. Dow Industrials down 439, Nasdaq off 97, S&P's off 65. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 428. You get the Nasdaq off 95. S&Ps are down 65. Let's go inside the NDX 100 and see the strength versus the weakness out here today. Strength, you got Mercado Libre up 5% or $28, trading $5.90. You got Activision up 4%. $2.56. Netflix is up 4%, $16.68. Netflix is on a tear here. In fact, we'll go back to that in a second. Taken away from it, Cintas. Cintas is down 7% or $13. You got NTAP off 6.5%. We got Walgreens Boots down 5.5%. And you have Willis Towers down also 5%. So let's go over to Netflix first. Netflix is up $16.22 right now. This has launched its high. It's going, I believe it's going right after its highs. If it looks like it wants to launch it. Yeah, it's going to launch its high, man. So Netflix, yeah, it just launched it by $7 already. So Netflix is basically had the same type of setup, folks, that Amazon had. Now, this is pretty intense. And what it was is this. This was in a consolidation since February of 2018. When the market, in fact, was going to all-time highs, Netflix, as well as Amazon, did not go to all-time highs. It's so wild watching this, but I suspect we're going to be able to learn quite a bit about how this baby moved. Now what you have is that Netflix overtook its high today. You get a small down market. Bottom line is that this launch of this 423, the further you get away from that 423, the higher the probability that you will get, a leg up that'll be extraordinary. And when you talk about a leg up, in Netflix, I think it's a couple $100 leg up. Yeah, it is. It's a couple $100. It's $190 on top of 423. So you're talking about $613. That's how that baby's set up right now, and that's on a long-term basis, but big deal, right? Amazon has already done it. Amazon, that definitely launched it. It was an ABC structure up to start out with. Then it just blew away the top of the consolidation. The top of the consolidation, Amazon, was 2,050, and we're 270 points above that right now. We're at 2309, and that's saying that 2,500 is coming at you now. With $200 for Amazon, that's not a monster deal, but that's quite a setup when you have a market such that we've had in the last 6 weeks. Yesterday, when you take a look at the NDX 100, if you want to see a number that is pretty amazing, actually, if we pull up the NDX, we can even look at it today, and it's really no different today. When we pull this back, just look at this for a second. When we pull this back in the NDX 100, we are where we were on December 19th. If we go to January 1st, watch this one. If I go to January 1st, there it is right there. So January 1st, we opened up at 8802. 8802, and yesterday we hit 8708. So the bottom line inside the NDX 100 is that for the year 2020, you're down yesterday you were down like 1%, today you're down about 4%. For the year. Now, granted, the NDX 100 went much higher. We got up to 9736. That being said, though, guess what? These tech stocks are still strong like bull. What also, the chip stocks, if you take a look at these chip stocks, look to me like they're going to run again. If you take a look at Micron Tech, what Micron did out here, big rejection of lower price out here today. Yesterday, you went high with 25 million. You get 16 million today. Small price spread. It already rejected $45.63. You take a look at AMD, same type of setup inside AMD. AMD, look at AMD. It not only rejected lower price out here, it actually went higher, and it's going to have the volume, which is pretty amazing. So the all-time high in AMD is $59.27. You're at $54.97 right now. Let's go take a look at work. This is Slack Technologies. The low is $15. The high is $42. Let's see what this is setting up. Okay, so you get a consolidation here. Put this on a weekly for a second. Okay. Well, yeah, this is running to 29. Right now you're at 2687. Looks like it wants to run to 29. Let's see when they come out with their numbers. They're going to June 9th, so that's a long time. They probably already come out then, yeah. April, May, June. No, that's just late. So they're coming out June 9th with their numbers. Some of the higher volume equities out here, and this is going to be a wicked low volume market out here today, folks, is that, actually, let's go into the Dow Industrials first. You know what we want to do? I want to go into Oxy. So I was explaining this morning. This is pretty intense, folks, okay? You don't see this happen with large stocks. You do see this happen with a huge amount of pump and dump stocks. And this is what it is. So picture, when Warren Buffett came in, and when Occidental, now this is one of these deals when you have the executives, the board, all the above. You had one company that was trying to take over Occidental. Occidental turned around, took over Anadarko to basically save themselves and save their jobs. Well, at that price point there, this is when you're trading up at $50, $60, $70. Okay. Bottom line is that they got financing for $10 billion off Warren Buffett. Inside of that, you had a preferred dividend, and what ended up happening, of course, is that Occidental crashed. I mean, really crashed even before the crash in the marketplace. Occidental had already come down from $47 down to $26. Then, of course, the coronavirus came in, they come down to $9. Now, what ended up happening is that they have to pay the dividend. And so what they did out here is that they don't have enough cash to pay the dividend. The dividend was $227 million, I think. I believe it's $227 million. Make a long story short, what they did is that they gave them shares. They gave Berkshire Hathaway shares. Okay, they gave them 17.3 million shares. So that dilutes all the shareholders. And right now you get shares outstanding is like 900 million. The problem with this is that this is like the death keel in equities, because as they have to keep continuing to pay the dividend, which they have to do, by the way, okay, the bottom line is that they're going to have to keep giving shares out, which dilutes the equity on a continual basis. Now, watch what ends up happening. That's only the first part of it. The second part of it is actually more concerning for a stock. And what it is this. All large traders know that they have to come up with a dividend. They know that they have to, they know ahead of the fact that they're going to basically issue shares. Well, it's a no-brainer. When you know that they have to issue shares and dilute the stockholder, what ends up happening? They short the stock. So this is going to be pretty wild watching how this shakes out. Right now, Oxy has a 8.7% short position in it, and I suspect over the course of months here, more than likely we'll see that start raising a bit, because once folks are onto that slope that's going down, the amount of shares that are coming out, it's going to be a problem. Dow down 442, NASDAQ off 102, S&P's up 66. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow down 479, NASDAQ off 118, S&P's up 71. Let's go to our man John in Philly. What's going on, brother?
Good afternoon, Tommy. Thanks for taking the call.
Absolutely, man. Thanks for calling. Thanks for holding. Appreciate it.
Tom, I wanted to ask if you would just share with us some detailed thoughts here on GDX. Just by way of background, I suspect, probably like you, that the move off of 32.25 yesterday is just a little corrective dip that will lead to higher price sometime, maybe soon. Can you just take a look at either the daily or the hourly 10 minutes and give us the benchmarks that you'd see if price, in fact, dips a little bit further down?
So let's take a look. So the GDX, folks, is the gold miners ETF, okay? Inside of that, you have some very strong gold miners. They've been on a run in a huge way, too. What you had out here yesterday you were testing that high that was generated out here on the 24th. And, you know, we had lighter volume, 59 million versus 87. That being said, bottom line is that there's no sellers coming back here. You can see 26 million. You're going against 59. That's on your daily. So if we take this and we put this on the weekly, let me bring this. I'm going to actually take this on the monthly because this is where we were set up here. On the monthly, what you have is this, and this is going to be the number. Now, a lot of the gold equities, folks, have actually taken this out. When you take this out, you can expect real acceleration on the upside. And what it is that this has been in a consolidation since 2013. Now, the top of that consolidation is 31.79. We hit 32.27 this month. Bottom line is that that's the number, John, you want to keep your eye on. Because if it blows by that, then, man, forget it. Then you're going to be at $55, like, quick. And what has happened, if we bring up Newmont, so Newmont, Barrick, and Franco-Nevada make up almost 40% of that GDX, folks. And you're going to see, I mean, Newmont took off forget it. Newmont was $33 on March 26th, or March 16th? What is that? Yeah, March 16th. When we take a look at this and you take Newmont, you're going to see what I'm talking about. Once you overtook that $44, I mean, it just takes off, man. It's pretty amazing, you know, how that happened. Now, Barrick, I believe, is just approaching that number. Let me look at Barrick for a second. And then Franco-Nevada's all-time highs. Barrick, yeah. See, okay, so with Barrick, it's going to get interesting, man. Barrick's a point away from it right now, you know. So Barrick looks like it can get some action also, John. And when it's, let's say it's a couple points away, that's what you really need. A couple points away, man, that's saying that Barrick can run to like 44. So, and then, of course, Franco-Nevada, you know, bottom line, this is all-time highs anyway. So
Thanks so much on that. I just have to remark, you and I both remember, I think it was January, February of 19, that Newmont bought out Gold Corp and simultaneously did a joint venture with Barrick with its Nevada operations. So it's
That's right.
Obviously a real powerhouse, and the institutional money's coming for it big time.
That's interesting, man. I forgot about that too. That's right, man. That's it's interesting there too. So watch what has happened here, folks. Is this when John just mentioned that they had bought Gold Corp out? What happened is this: Gold Corp, their Red Lake mine had some of the least expensive ore out there, meaning a couple $100 getting out of the ground. What had happened is that they had bought. Remember Glamis, John?
I do.
Yeah, we made a lot of money on Glamis.
That was one of your Gold Report winners.
Yeah, and what happened, folks, is that what happened in Gold Corp had way overpaid for Glamis, man. I remember that day so well. I was like, you got to be kidding me. Because Glamis had a great mine in Mexico, folks, but the bottom line is that their price of the ore coming out of the ground was a lot higher. That being said, and this is what you're seeing inside the gold market, if gold stays at like the 1,700 level, folks, okay, there's very few gold companies that don't make money hand over fist at 1,700. That's what we're looking at, and that's one of the main reasons I think that, I'm actually surprised a little today, John, that like a Barrick is basically holding up. And I own Barrick right now, but I'm still surprised that it's holding up. Do you know what I'm saying? Because it's like, man, this is intriguing. But then if you go back to the fundamentals on it, as long as these mines can stay open, and that's can be a problem with the coronavirus, folks, okay? The bottom line is that you're talking about millions of ounces of gold, not hundreds of thousands, in between both of those companies. So that's what I think we're looking at, John. Because it's surprising, as I just said, that these equities are actually holding so well. Particularly, that sector has taken off more than any other sector, folks. If you hear that, what's gold doing? Well, these gold equities from the lows are up, some of them 100%. And I'm talking about in 6 weeks. So it's like wild, man.
Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one. So they're big numbers that they're up, and it has to do with, of course, with the buying aspect of it. Now, what's really intriguing, Tommy and I had Teddy Kegstad on this morning. Now, Teddy is a currency trader, commodity trader. He's on every Wednesday at 40 past the hour and the morning show. And he brought up a great point, which I wasn't even thinking of, but he's been in the pit forever, okay? Has that experience of being in the pit. And what has happened inside the pit, folks, inside commodities in general, is that the rest of the commodity index, meaning if you go into the agricultural commodities, right, they've crashed, basically, okay? They're people, bottom line, they're really not trading them. Well, they're trading them, but it's not like a trade that you want to be involved in, because the fact of the matter is you have factories closing down, you have slaughterhouses closing down. So these futures are at very low prices. And what he was bringing up, when that happens, of course, when you're trading, you're trading. And we all have some favorite sectors. We absolutely have some favorite structures, meaning whether it's the dollar, whether it's equities, whatever sector. But what happens inside the commodity market is that you have traders that have been trading all the eggs, and then what ends up happening, bottom line, they turn around and start trading gold, start trading silver, because you have movement in it. All traders need movement, folks. That's the real bottom line. So that's what you're seeing out there. Let's go take a look at, we got a target that wants to look at Golden Star Resources. Okay, so this is a company that operates mines in the Ashanti Gold Belt in Ghana, West Africa. Let's see what kind of revenue they got here. Okay, so they're taking in $264 million. They make 17 cents. They plan on 290. If we take a look at this, okay, so this is an equity that really hasn't moved yet. I wonder why. Yeah, I would question. I would really question the aspect, folks, on this, and for the target they called. I'd go look at another equity, man. This equity, just to give you an idea, this equity, the low is 185 and you're only at 260. Okay? The bottom line is, just as I said, these equities that making money, like an Eagle, it just went from $31 to $52. You want something that's moving up. Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 493, NASDAQ off 128, S&P's down 73. Let's go take a look at those S&Ps and see where we're shaking out here. So, bottom line, it couldn't get up over the high that was generated out here at 7 o'clock this morning, folks, that's when the S&Ps were only down 50. That was 27.99. We made it up into that 27.92. NDX 100 a little bit different, and this is where you can see that the NDX is still the strongest index out there. Bottom line is that did get above the highs of this morning. The highs of 7 o'clock, 7:20 this morning was 86.18. We got all the way up to 86.56. And then you did give it up. You're underneath it. But bottom line is that you can see that the NDX 100 is still the leader out here, folks. And if we go take a look at the 3 Qs, you're going to see the same type of setup. What we have out here today is that you get a pullback, You got much lighter volume. You don't have enough sellers out here in order to sustain lower price. You get the 3 Qs, 42 million shares versus 63. And if you want to see something, we know that the Russell 2000 is the biggest dog in the world. Has been, never went to a new all-time high. July 2018 was the number. And even in the small cap space, folks, the volume has contracted. You're down $5.30, so it's taken a hit price-wise. No two ways about that. You're coming into 52 million shares, though, and you've only done 31. That says quite a bit when you can take the weakest indice. It's acting the same way that the stronger indices are acting. That tells you right across the board, folks, that there's not enough selling to sustain lower price. So what I expect we're going to see out here, and it's going to be really hard to do because of the aspect that the European markets, folks, closed at their lows. We were down 416 and the DAX, you're down 193 in the FTSE. That being said, bottom line is that it looks to me like when Asia is opening back up, you'll take a little heat at the very beginning of this market. We had the Hang Seng was down 1.1% last night. But the bottom line, the way that baby looks, you can take a little heat on the open. It looks to me like it's not going to be a lot. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Come back and visit us tomorrow morning.